Chase by Dallas, make it hurt.
Good day, everyone, and welcome to another episode of Let's Talk Commercial Real Estate Investing, the Black Edition. I'm your host again, Dominic Green, currently a managing partner for Tenneco Commercial Real Estate Services here in the DFW marketplace. So I just want to pop in real quick, kind of use some insights. I know, like I said, I don't necessarily talk about multifamily a lot, but I did want to bring some insights into the things that I've seen here recently that may, for those who are interested, to pursue multifamily, to do that, as well as for those that are looking into doing owning retail, to do that as well. And this is just kind of some recent experience. So while I don't technically sell houses for a living anymore, I did it when I first started in real estate, and then saved my pennies to transition to do commercial real estate. One thing I can tell you right now is that when they talk about the way that the market is, as far as it being hot, it is crazy. And what I mean by that, man, homes out here are getting multiple cash offers. I mean, and I'm talking almost full price cash offers for what they're going to buy. So what does that mean in the standpoint for commercial real estate or multifamily? It means not everybody's going to be able to get a home, at least not for a while, right? Because you got the dynamic going on now, to where if you're a seller, you're getting top dollar and more for your home. But if you're selling and you also need to buy, you're gonna have to pay top dollar to get your next home, right? And that's if you're buying a resale home, you're still gonna have to pay top dollar if you're getting a home that's being built, because the price of lumber has gone up tremendously. So when they were talking about, adding $30,000 to your purchase price of your home, you better believe them. It's around $32,000 to $36,000 additional. So a lot of your builders aren't even closing on the actual price of your home, because they're holding it open for the cost of materials, but they're building, and then at the end, you guys are going to have to settle on the final price and go for there. So again, what does this mean? It basically means that there's going to be, the renters are going to be renting for a while, and those that have aspirations for home are going to be renting for a while. And on top of that, the rental rates for a lot of your properties are going to go up because demand is strong. So for those of you looking for opportunities in multifamily, especially when I've been talking here about affordable housing, and that kind of brings me to the case of why, instead of doing value add, which is cool, everybody's doing that too. I think there's a way to do both, where you can provide clean, safe housing, make some money, but also address the issue of affordability, because if everybody's raising the rent, where do those people go? All right. So that means you have a demand that's there, that's not going away anytime soon, especially given the dynamics of residential, for housing, for new builds, wages still kind of stagnant somewhat. So with all that being said, the opportunity to have a strong demand of people who, affordable housing never goes anywhere, really. The statistics showed it in regards to the occupancy from the reports from the big guys, your CBREs and them, your Nova Grad, So those you follow those reports. So it presents a unique opportunity, like I said, for those that may pursue doing that particular strategy, preservation versus value add, to still make money and have something that's long term, that cash flows is always going to be in demand for a while, even if you do the value add. I mean, it's just a preference, right? Now, that's what I'm seeing from that standpoint, and just from some brief experience here with that. Then when we're talking about retail, as I mentioned in probably earlier videos to you guys, the rent for retail hasn't went down. As much as everything was going on, they weren't decreasing the prices of the rental prices, right? So that was still going on. And then with everything being with the restaurants, things are kind of getting somewhat back to normal. Things are opening up. The PPPs, the new revitalization fund, especially down here in Texas, to help restaurant owners. And now, here lately, restaurant owners are now, new and existing, are looking to expand their operations. So then, just goes to the case of, if you're looking to own a QSR, which would be your big guys that you probably look at, that are corporately owned, like they've been making announcements that they're still expanding. They're looking for sites, so you're talking about single tenant net lease deals that are backed by them. Then you also have your neighborhood or community centers. That could be options. We got the end caps available. And this is just from, talking with a current client that's looking for space. Their reason why they think now is the best time. Now that everything's kind of settled, they can kind of do a better job of projecting their revenues, paying back loans that they took out, so forth and so on. So it's a good opportunity to look into retail, because retail right now, from a cap rate standpoint, your cap rates are going to be better. And for those who don't understand what cap rates are, it's basically your return on investment if you paid all cash. So retail is still trading between anywhere from 6.5 to 8, versus your multifamily that's trading anywhere from 3.5 to 5.5. So there's a variance and difference there, with the higher cap being on the lot older product. So, like I said, with that being said, there's opportunity there. Now, as I've been talking about, there's opportunity in retail. Retail is just specialized. You have to really be in depth, understand the businesses more so, how they play into the center, how they attract. If it's a single tenant, what do they serve? How strong are they guarantors, revenues, all that good jazz, to make it a quality decision on whether to place capital in that particular investment or not. So, with all that being said, I think for those of you who have been on the sideline, it might be time to kind of start looking at the opportunities that are coming abreast. Like I said, things are opened up. Once it hits the news and everything like that, and everybody says, "Oh, everything's getting back to normal," then you get the flurry of investors with appetites going back out into the marketplace and picking up properties. So you're getting into competing and bidding wars and all that, which is, at the end of the day, anytime you auction someone off in a bidding war like that, it typically just draws down on your returns, initially in the short term, depending on what the play is. But again, if you pay too much, there could be issues long term. You never hit those target numbers that you were telling people you're going to hit when you're investors. So, as always, share, subscribe, leave a comment, leave a like, leave criticism. Like I said, the platform here is for us to have a discussion about investing in commercial real estate as individuals, as a collective group, sharing experiences, sharing knowledge, all for the ability for us to do better, to own, control, leverage, wealth, generational wealth at that, and to be able to take care of families and fund the things that are most important to us. So, again, leave a like, share, subscribe, join the Facebook group that I put in there in the link below, as we're trying to grow that so we can have conversations offline as well as online, and let's continue to have the conversation. For those of you who have knowledge, go ahead and share in the comments. There's a certain topic also you guys are interested to know about, talk about. I always love doing research. I'm always looking for opportunities. Leave that in the comments as well. And until next time, happy investing. Bye.
These my dollars make it hurt.